We're going to take a look at ES on multiple time frames from the month all the way down to 65, and we have to take a look at the VIX. The VIX is what made the market move today. We're not going to look at Dixie or the dollar or bonds because they had nothing to do. They didn't do anything today. It was all in the VIX, and so I think this was a big start to a up move in the VIX and a down move in the market. That was the label of my video from yesterday. It was, are the bulls going to buy the VIX or are they going to buy the market? They bought the VIX. Okay, if you're new here, go down to that bottom right hand corner, hit that options tender logo and subscribe. And don't forget to like the videos. So we appreciate all your support. Here we go. We have ES on the monthly time frame. We are finally back underneath that 8 EMA. We're getting follow through from this reversal candle here. We do have an event tomorrow, so it's more data with the employment situation. So we'll see what that does, but reading the chart, we're bearish. We're starting to break down from this sort of ascending triangle. I suppose you can call that ascending triangle. We would have broke down from that if that's what you were forming. We still have this large range sideways. We're at towards the end of this little range here. We're towards the bottom of it, so we're coming into a big area from there as well. We're not out of the woods, but the bears are definitely in control. All right, let's go down to the just to let you know, once again, we're looking for this 35 to 3200 area being the next target. And on this weekly time frame, and don't forget to hit the notification buttons if you like this information because we do videos all the time. So check it out. On the weekly, we have lower highs and lower lows. We're clearly in a downtrend. What will solidify this downtrend continuation is this point right here. Okay, we're back to the top of this consolidation area, but to break this low at 3,800 would be the nail in the coffin. We are back underneath all the moving averages, and we're right back to this line. If you followed me for some time, we drew this line months and months ago. It still is a factor. It's kind of like that bow and arrow resistance and support. And it's going to act as so, again, we break down from this point. I think that might be it, you guys. I know that's an early sell signal, but this has been a long triangulating area. And according to this chart right here, we're breaking back down into it. It's a fake break. So on the weekly time frame, we are breaking down. Just a significant point here was we showed that we're back into a downtrend area. We're testing it right now. And if we close like this tomorrow, the week, we will get that bearish crossover. So next week should be another follow through bearish week. So big day for the bulls tomorrow. They got to really step up their game. So let's go down to the daily time frame. Changing the board, daily trend is our friend. So looking at this more in a bearish perspective, we have a rising wedge that was broken down, back tested, and now underneath all the moving averages again, starting to kind of break through. It's not, you peek through and you have a close. There's no sign of reversal, but we're right here at the volume node, at the point of control. We made a new low here. And I'll show you on the next chart that really we have one last stance for the bulls to start over, really. But seeing how the bears are in control, we should see a little bit of grind into this area because there's so much volume and so much trading here from that holiday trade back in December. But really our target would be right here. We'd be on ES, we'd be looking at that 3,800 to 3,030 area for the next move. And that should just be a minor support, really. After that, we go to that 3,700. If this is the bear scenario that we've been talking about, yes, it might feel like a grind all day long, but we should have some pretty, of course, nothing goes straight down. But we should start to pick up momentum as we go. and then get nice big bounces, maybe even overnight gap up and then gap and crap and things like that. So this should be a pretty intense move, probably more intense than this one if we're in that bearish scenario, because we're going to have to break these lows down here, and it might take a little bit, but you got to get there. And I think we've already had our 1-2 setups, and maybe smaller bounces at this point until we get to the wave 4s, which that should be some time away. All right, let's go to before we go to 65, just while we're on the daily, let's pop over to the VIX just to see this daily candle. Boom. That's what we've been looking for. We have the bottom of this triangle. We keep testing it. We keep reacting off it. That's what we've been talking about. We have one day that almost consumed this entire week or two right here. And just an impulsive, bullish engulfing candle. We expect follow through on that. There could be a pause day tomorrow. I don't know. But I do expect continuation. So let's go back over to ES and we'll finish this off on the 65-minute chart. And before we head into, I did add on some, just so you know, I added on some call protection because we had the data coming out in the morning before market. So we'll trade futures as well, but our options chart, we want to make sure we protected our options. Even though I think there's a good chance we might even gap down tomorrow for continuation. Anyway, I'm babbling on. But here's what I want to say about the bulls. If there's some sort of bullish scenario and these employment situation is bullish, and this, or maybe the market interprets it as bullish, and they say, oh my gosh, this is probably peak or whatever the story is going to be, then we would count this as a 1, 2, 3 all the way down, or 3 here, doesn't matter. 4, wave 4 would be the ABC, because we already got a new low. This is a 5-wave impulsive move, so we got a new low, so that can't be an impulsive wave 1. So this would be an ABC for wave 4, and finally you would have to count this as a 1, 2, 3, 4. All this is 4 and 5, okay? Because 3 would still not be the shortest. There's a lot of stuff going on in there, and that would be the end of this entire move. And so if that's a leading diagonal, or if that's just considered an ABC correction, there's a couple different ways that we're going to have to kind of work out. But either way, if that's the end of this move, then we're going to look for a nice big correction. So we'll have to see how Friday is. Friday is going to kind of be the thermometer on what happens the next week. If we get a small move up here, that could be easily a brand new wave 1, 2, and we start heading lower. So don't get all bulled up into if we have a nice, scalp, but don't get all bulled up if we get a nice big move tomorrow and maybe a follow through Monday for some sort of reversal candle, and we continue to the downside. Okay, this is not going to be straight down. They're going to try to fool everybody. When there's too many puts, then they're gonna shake out the weak hands. So that impulsive move down is very important, if that is an impulsive move down. The other way I have this counted is that this was a 1, because we have a 1, 2, possibly 1, 2. You can consider this whole thing just a 1, 2, but I have this as a 1, 2, and then a 1, 2, and then another 1, 2. And so this should relentlessly continue to the downside. But that, I'm going to kind of take that tomorrow. If we gap down, we continue to go. That's going to be the scenario. If we pause here and start to reverse and have a nice big reversal candle tomorrow, then I think that that would be more the scenario that we're just bouncing and or reversing. So we're always trying to stay ahead of the game, always trying to anticipate what's going to happen. once you follow price action, you see that it's strong for the day, then ride with it, because it's probably going to come out 50-60% then. If it's very weak and we come out just selling, then we're probably just going to come straight down to this 38.15, 3800 area where all this chop zone was. We could even look over at NQ. I'll give you a little bonus here. Looking at NQ, we didn't make that new low today. So what does that say? Perhaps rotation tomorrow selling could in tech could start leading the way down, or this move has already done and we're actually at a 1-2 setup. Okay, it's possible that could be an A, B, C for a zigzag down to a 1-2, but that would mean that it's going to have to drag SPY up with it tomorrow. The market would have to show some bullish signs. There are two different situations, so that's even another way. There's all kinds of ways you can look at the market, all sorts of indicators, but if you look at these together, then I think NQ would have to be the weakest market tomorrow if we're going to continue on to the downside. It can't continue like this. The small caps and the Dow are not going to lead us all the way down. This has to come down with it. All right, so a couple things to look at. We'll keep you updated. I'll do my short video in the morning for prep just to see where we're going. So go ahead and subscribe and you'll get those shorts as well. Really helps get that mind frame set when you're starting out the day. And don't forget to check us out on The Options Guy. Okay, all right. Have a wonderful day. We'll talk to you in the morning.